One foot out the door. One foot out the door.
Mortgage Monday, baby. What do we got? We got Mortgage Monday, volume 66. I made a typo. That one's on me, guys. I put Mortgage Monday, volume 65. That was last week. I'm going to have to see if I can edit this. I don't know that I can do it live. Yes, I can. Bam. All right, guys, we're good. It is December 17th. We are getting ready for Christmas, but we got to do Mortgage Monday. Because it's Monday, I got to drop some mortgage knowledge on you guys because I've been coming across the same problem for the past couple weeks that I know I need to educate everybody on. And this topic today is going to be really, really big out there. People get pre-approved when they're getting ready to buy a house, right? But what happens when you go under contract with that house? How does that whole process start with taking a real application, submitting disclosures, monies that have to be saved? This is something that we need to talk about tonight, ladies and gentlemen. I am Chris Patille, aka your mortgage boss, and I am dropping some information on what you're going to do after you've been pre-approved to when you actually buy that home. So the first step you're going to do, everybody knows, you're going to go out there, you're going to speak to somebody like me, and you're going to get pre-approved, right? We're going to go over your income. We're going to go over your assets. We're going to go over where you currently live, your name, your date of birth, your social. We're going to go over the whole nine. You're going to get pre-approved, right? The next step on what we're going to do is we're going to set you up with that real estate agent. We're going to get you out there starting to look at homes, starting to shop around, getting into this crazy market that we're in now. Once you find a house, the $1 million question is, now what? So now you're going to come back to me, right? You're going to say, Chris, I found this awesome property over at 34 Century Lane. Are you able to work up those numbers for me? Absolutely. I'm going to go over the monthly payment with you, principal, interest, taxes, and insurance. If you work with somebody like me, I even get a homeowner's insurance quote for you. I'm going to break down the whole payment. You know exactly what your monthly payment's going to be and what the interest rate's going to be at the time that we're speaking right then and there. The next thing we're going to go over is we're going to go over how much closing costs you need. People are going to say, Chris, what is closing costs? That is a very great question. There's a lot of things that determine the whole closing cost. What's up to my girl, Jen Bytech? What's up, girl? The closing costs are going to be found on what's called, this is a closing disclosure, but I'm going to call it a loan estimate for conversation's sake. I'm going to give you guys a little breakdown. The first part of a loan estimate that we would look at as far as closing costs is going to be any origination charges. What is that lender's underwriting fee? What is that lender's processing fee? What are those numbers going to be? Do they charge an application fee? Do they charge any points up front? The next thing you're going to look at is services that borrowers are shopping for. Your title work, your real estate attorney. These fees are going to be what goes into the closing cost. What I do for you is I get an estimate beforehand of what that title work cost is going to be, so you know exactly how much that portion of your closing costs are going to be. Obviously, we're going to have your appraisal fee and we're going to have your credit report fee, which is all included into your closing costs. The next thing we're going to look at are your escrows. That's going to be all your prepaid items. How much are your property taxes? How much are your homeowner's insurance? How much money do we have to set aside up front to put in your escrow account so that when those taxes and insurance are due, that we have enough money in that account to be able to pay those? That is very, very big. Escrows are huge. We're also going to look at odd days interest. So you're going to close at the 17th of the month, right? Well, that interest is going to take you all the way up to January 1st because the mortgage gets paid in arrears, meaning that you have to live in the house and earn that interest before you can actually pay on it. So that's why any loans that are closing in December, you're not going to have a December payment. You're not going to have a January payment. Your first new payment's going to be due February 1st. Yes, it is. And let's see, a couple other things we're going to throw in there. Definitely some owner's policies for the title insurance. That'll get wrapped up in there. But pretty much that's going to be a rough idea of what the closing costs are. Now, one of the biggest things that people get confused about when they're looking to buy a house, when they're trying to calculate that money up front, if you're not talking to your mortgage lender. They're going to get very confused and they're going to say, okay, I know my down payment is FHA. It's 3.5%, right? So on a $200,000 loan, that's $7,000. I did that math just then. But is that actually right? Hold on. It's been a long day. My brain is fried. Time. It is 7,000. I wasn't wrong. So they're going to say, okay, I need $7,000 if I'm buying a $200,000 house, and that's it. That is not it. That's only one part of it, because you're also going to have your closing costs, which is everything we just talked about. So those closing costs may be, let's say, $10,500, right? So then you're going to need $17,500 in order to buy that house. So this is all something that we're going to talk about before you put that offer in, right? We're going to go over the whole process. Hey, here's how much your down payment is. Here's how much your closing cost is. We also have the option to request a seller credit. What is a seller credit, Chris? Perfect question. So we're able to request a seller concession or seller assistance. This is money that the seller is going to give you to put towards your closing cost. So let's say you're buying that $200,000 home, right? We're going to request 3% there. So I know that you're going to be getting a seller credit of $6,000. So that $10,500 closing cost just got dropped down to $4,500 with that $6,000 seller credit. So now you only have to bring what? You got to bring $7,000 and $4,500. You have to bring $11,500 to the table instead of that $17,500, just because the seller gave you $6,000. Now, I wanted to get that out there because so many people are coming to me, and let's say we do the pre-approval up front, right? And it's been maybe a month or two since we've gone over some numbers. You know, you start to get misconstrued and you start to get confused a little bit. That's fine. That's why we're bringing it back. I actually really like these sunglasses. That's why I'm wearing them right now. It's not because any other reason. It's been a long day, but hey, we got water in the cup. Delicious. But so now you know what the closing costs are, right? I'm going to recommend, hey, here's how much seller help you need to get down to your ideal out-of-pocket cash to close per se, your total down payment and your total closing cost, because we go over all of that. I ask you upfront day one, what is your max for your monthly payment? How much is your max for out of pocket? That way, if you say, Chris, my max out of pocket's $10,000 and your closing cost and down payment are $17,500, I know you need to get that seller credit of $7,500 or the deal just won't work. Or you might have to look at maybe a lower valued house to where the closing costs can come down. But some of the other confusing things that I want to talk about right now, right? So let's say you said, okay, Chris, that works. I love it. I know the down payment. I know the closing cost. I'm going to sign the offer. Great news. Your offer gets accepted. Your real estate agent calls you. She says, hey, John, great news. We just got your contract accepted. I'm going to send it over to you to sign, and then I'm going to send it off to Chris so he can get working. The question is, what's next? What happens after the contract gets signed? This is something that I need to talk about because I hear it time in and time again. You have to realize in my day as a loan officer, I've closed over 570 loans since 2011. That's insane. So with that knowledge comes everything that I bring out to Mortgage Monday, because I want to educate my clients. And not just clients, I want to educate everybody out there that's watching that may be in the process of buying a home or maybe in the near future looking to buy a home, because this is something that is going to educate you to make your transaction easier. And that is my goal, to have the best customer experience somebody can have when buying a house. And we got a lot of big things coming in 19. Super stoked about that. So you signed a contract, everybody's happy. Now what? So you signed a contract yesterday. What do I do today? What is my next step? So when you're working with your loan officer, they're going to be getting all the disclosures together. That is all the federal regulated state disclosures that are mandated to go out. That's going to have your 1003 application. It's going to have your loan estimate. It's going to have a bunch of privacy policies. It's going to have 4506T documents to get transcripts for your taxes. It's going to have social security authorization forms so you can verify your social. It's going to have a bunch of documentation out there that you need to sign. That's the easy part, right? We're able to DocuSign that to make it easy, so it really only takes about 15 minutes to go through the whole thing. Jeremy said it's pretty sunny in your office. Thank you, Jeremy. Appreciate that. So we get all those disclosures out to you, right? And people are going to say, all right, so what's next? Now your loan is going to move a step forward. It's going to go into processing. What does that mean? So that's when my processor gets a hold of the file. We're going to order that title work. We're going to order the appraisal. Now, be cautious. The appraisal is another fee that we have already included in the closing costs, but it's paid out of pocket. It's paid outside of closing. This is something that I will send you an invoice for, or you can give me your credit card number. I'm able to order that over the phone on the computer. And that's something that will come off of your total number at closing at the end. So we were at $17,500, right? That $500 that you just spent on your appraisal now brings the amount due at closing to $17,000 because that was paid outside of closing. So that is one of the only out-of-pocket costs on the mortgage side that you're going to see when buying a house. So at that point, our processor is going to ask, or I'm probably going to ask, hey, we need to start looking into homeowners insurance. We need to keep your house insured if anything bad happens to it. A tree falls, somebody breaks in, somebody gets hurt on your property, the whole nine. So that's something that you can start shopping for, but that gets paid through the loan itself. So don't be afraid. I got that covered in that $17,500, not to worry. The next out-of-pocket cost that somebody will see, and this is normally something that the real estate agent is going to guide you through, is the home inspection. This is a big thing. When you're buying a house, you need a professional to get out there and say, hey, that trim work's not right, or that window's broken, or that door won't shut because the carpet's too thick, or that HVAC system isn't installed properly, or there may be a hole in your roof. This is something that you're going to want to have done because it's going to expose anything negative, or it's going to expose any major defects with your house. Now, a lot of people think this is something that's included in the mortgage. It isn't. This is an inspection that you are able to order on your own. It's not required as far as the mortgage goes, but it is great to have because it's going to let you know of everything that you're getting when you buy that house. When you sign on that contract at the end of closing, that house is 100% yours. If you don't have a home warranty and something breaks day one, unfortunately, that is your problem that you have to deal with. The home inspection is designed up front to bring light to all of that because we're able to go back and renegotiate with the seller at that point and say, hey, there's a couple things on here that are major defects, and that's something that I would like to have corrected. So that's great, right? So we talked about the two big things that come up financially up front, and you're normally going to be anywhere from $1,000 to $1,100 up front. This is something you guys have to know. A lot of times when we're doing a no money down loan, right? We're doing, let's just say for Delaware's sake, a Delaware State Housing Authority, where we're getting 5% of your down payment covered by Delaware State Housing Authority, covered by DSHA. Everybody thinks in their head, I don't need any money. Well, that's not true. You have your appraisal. Yes, it's a closing cost, but that is something that is mandated to be paid upfront directly to the appraiser so that even if the report doesn't come in where we need it to, we have that back. Katie says, I think he only sees darkness right now. Brian says he's ignoring all my silly comments. Brian, I love you. And no, I'm not seeing darkness. Like I said, I really like these sunglasses. I look at light all day long. Why can't I wear a pair of sunglasses without being judged on Mortgage Monday? Thank you, everybody. So you have your appraisal out front. You have your home inspection out front. The other thing I want to bring up is when you sign that contract, right, when you put that offer in, your real estate agent is going to ask you for an EMD, an earnest money deposit. This is in good faith saying that, dear Mr. and Mrs. Seller, I am interested in your home. Here is my offer. Here's my good faith deposit that shows you I am serious about this. Whether it be $500, $1,000, $2,500. This is something that you're going to write up front, even if it is a nothing down loan and we're doing DSHA and we're getting a seller credit to cover everything. you're still going to have to put this earnest money down. It is very, very important that you keep that in mind, because a lot of people, when they're trying to plan their finances, right, they may say, hey, I have all this money in savings. It's not in my checking. I know I'm going to get paid 2 and 3 and 4 times before we close. So I know all the money will be in there. I want to alleviate the question marks up front by letting people know you should probably have $500 to $1,000 to $2,500, depending on the size of the purchase of your house, set aside for your earnest money deposit. Now, the good thing about the home inspection and the appraisal, it can be put on a credit card, assuming that that increase in your credit usage will not harm your credit score. So a lot of times, the money that you're saved to put down when you're going to write the check, right, that's going to come out of your savings. But it's also going to come off of the top number. So if you write $1,000 earnest money deposit check, that's coming right off of the $17,500 that we have allocated. So that's a great thing. So now you don't have to bring $17,500 to the table. You got to bring $16,500. Just remember, the other two things have to be paid up front as well. So I just wanted to come out today, guys. I wanted to drop that little bit of knowledge because I see more and more clients coming up against that, not realizing that, hey, I was working with another lender. I didn't know this. I didn't hear that. Or, hey, maybe their first time working with me. This is going to be a great video that I'm going to be able to use to explain that to other people out there. So if you're a real estate agent, a financial advisor, anybody out there that works with first-time home buyers, give me a share, give me a like. I'm Chris Patille, your mortgage boss. I should have a special guest next Monday. We're waiting on a few things to confirm, and I am already setting the stage for 2019. We are going to break it down Mortgage Monday in a whole different light in 2019. I'm super stoked about that. I hope you guys have a kick-ass week. Remember, take the time. It's the holidays. Spend that time with your family. Next week is Christmas. Mad love to everybody out there. Thanks for joining Mortgage Monday. And don't forget to be about that mortgage boss. Yeah.